Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. If you would, as we get going, please type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. Thank you. If anyone has any issues as we go along, please let me know. Now, as always, keep in mind, all trades that you make have risk involved. There's no one trade that's guaranteed to profit. So as you trade, you obviously should manage risk in a way that makes sense for you and consider your trade size, your stop loss distance if you're using a stop loss setting. Maybe prepare hedge positions to cover bad movements that might go the wrong way. Some different ideas that can help with your risk management. And so there's also a special tool in our web trader and our AvaTrade Go mobile app that uh, protects against losses for defined time periods, which could be part of your risk management plan. It's called Ava Protect. And for a small premium cost, you can protect your trades by the hour, by the day, etc. And any losses during those covered time periods are completely added back. So in some way, though, manage your risk in a way that makes sense for your risk tolerance, your balance, etc. Now, as we move forward, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. And we'll take a look at some features that are on the AvaGo mobile app. It's actually an award-winning app that has been receiving rave reviews in some of the forums that cover those things. Now, real quick, what is technical analysis? It's basically looking at the charts and looking for patterns and movements that maybe are predictable, that repeat themselves, that can give you some clue as to what direction you think future movements might go. And I know we have a mix of new traders and also experienced traders that attend these webinars. So what we cover will be beneficial for both in terms of advanced strategy ideas and also being basic enough that everyone can understand. But keep in mind, if we cover anything that you don't understand, or if there's something you want to suggest to others as an idea, please feel free to type your questions in the chat box or give your input or feedback in the chat box as well. I will monitor for any questions or feedback. Now, technical analysis can be done manually with your own visual representation and draw your own lines in terms of where you see price levels, support and resistance, trend lines, etc. And that's usually what we lean on most heavily in the webinars, and we'll do a bit of that today on the charts. And the idea with the manual methods is it's something that you can internalize and you can understand those price levels as you create them and view them on the chart. When you use indicators, which is another way that technical analysis can be done, they kind of do that legwork for you. But also, if you rely heavily on an indicator and not on your own manual methods, the indicators are more limited than what you can be. And what I mean by that is indicators don't know what the fundamental news situation is. They don't know that when something's overbought, it might just keep rising rather than just blindly trusting the signal of an indicator that says, oh, it's gone up enough, it should drop now. Or it's gone down enough, it should go up now. Whether you're looking at Bollinger Bands or RSI or whatever that indicator is, that's looking back at the same candles you can look at with your eyes and telling you that, oh, we think now based on the past movements, maybe it should drop or maybe it should go up. And that's what indicators are trying to tell you. And many times they're right. They can be helpful, but they're also more limited than your own brain. And so if you combine the use of an indicator with your own manual methods of technical analysis and your own knowledge of the fundamental news situation, then you can preferentially trust the indicator in one direction while maybe avoiding the signals the indicator is giving you in the opposite direction, because maybe you know better based on the whole situation on a checklist of ideas after checking headlines, fundamental news, your own price levels on the chart, and then looking at what the indicator maybe prefers you do. And when they're all in alignment, then maybe you have a better success rate than if those are conflicting with each other. Okay, and that we'll go over that as we go over the charts today. We'll look at some fundamental news. Maybe we'll add an indicator or two, and we'll also do the manual methods of technical analysis and find some potential entry points on the live movements and exit points for that matter as well. All right, so let's quick look at the fundamental news then before we do the technical analysis, and it only takes 5-10 minutes to do that. And it's well worth that 5 or 10 minutes so that you know which way the wind is blowing, so to speak, before you start trading. So that if you feel like the sentiment is up as it is today, as we'll see from the headlines and from the fundamental news, if you believe the sentiment is more up than down, then fundamentally you might prefer to buy off of a support level when you do your technical analysis, rather than finding something that already went up and trying to sell from the resistance level, which maybe it's more likely to break the resistance on a day where the fundamental news says that the instrument maybe should keep rising. And so maybe you preferentially trust one price level over another, one direction over another, based on what you quickly see with the fundamental news. So although this is a technical analysis webinar, we'll real quick look at the headlines fundamentally. Biden says $2 trillion jobs plan rivals the space race in its ambition. Okay, so now that already another 1.9 trillion in stimulus was passed in the US, now they're talking about 2 trillion more in a jobs plan and another trillion on top of that for infrastructure. So really they're talking about another 4 trillion in stimulus out of the US. And many times the old saying goes, you know, if the US catches a cold, the whole world sneezes, right? Or if the US economy is doing well, the rest of the globe tends to follow it. And so because the US is the largest economy in the world, it tends to affect other areas around the world in terms of overall sentiment. And we'll see this in the headlines. So there's some excitement maybe about more stimulus coming. And when I say excitement, I mean from the stocks, from the indices, from the equities. They love free money. They love when the economy gets injected with free money, and that's been helping the stock market reach new highs even through this pandemic. All of this aid that's been passed out, and maybe here comes more, right? Now we look and we say stocks firm, another headline. Stocks are firm, dollar gains as investors pin hopes on US economy. There's another headline. Focused on the US economy and maybe optimism about all of this stimulus. Next headline, Eurozone factory activity soared in March. Another positive headline. Now it does have a caveat there. It says supply issues loom because of COVID shutdowns. Okay, and there may be some renewed shutdowns coming, right, through the European Union and other areas. That's what the article goes on to say. And so overall positive headline, but with a warning there that maybe there's some supply issues with the shutdowns. But in general, it was good news. Eurozone factory activity has soared. Okay. Next headline, Asia's factory recovery picks up, but cost pressures emerge. Same sort of headline, positive from the outset in the headline. Asia's factory recovery picks up. It's not just recovering, but the recovery's picking up. It's intensifying the recovery. This is all positive news. There is a little caveat in that headline as well, that there are cost pressures emerging, but overall, that's a positive headline. We go, we take a look here. We say volatility index, S&P 500 VIX, that's the volatility index. Some refer to it as the fear index. It's down today over 4%. That's a pretty significant drop in volatility, in fear. And we see the futures are green, okay? US 30 futures, US 500 in the green. They have been all morning and into the afternoon. So that confirms the positive sentiment, meaning futures are green, fear, volatility is down over 4%. US dollar is actually weakening a little today. Okay, why would the US dollar weaken? Because people are selling their dollars and buying back into the stock market. That weakens the currency. When there's fear, stock market sells off and the US dollar strengthens, right? Now the opposite. US dollar's weakening, stock market's rising. And by the way, what happens with gold as the US dollar weakens? Anybody? Let me make sure everyone's listening. What happens to gold? Someone type. What happens to gold when the US dollar weakens? Typically, if the US dollar is having inflation fears because of lots of stimulus and the US dollar is starting to weaken as it is today, what can happen to gold? It can rise. Margaret, you were first. Thank you. And we talked about that in the last webinar. I'll show you some of the trades we took in the last webinars as simulation trades, and they did well. Why? Because we looked at the fundamentals before we did the technicals. Okay, so right now we see momentum down on the USD slightly. Okay, fear dropping, that usually means the USD can weaken. Stocks rising, we get the situation, right? And if we look at these announcements, more positive than negative, right? We've got a couple negative announcements here, the economic announcements, but we have positive announcements for Spanish manufacturing, for PMI out of with the Swiss franc. We've got Italian and French numbers coming in that are decent. Manufacturing PMI numbers here above expectation. Out of Great Britain, manufacturing PMI better than expected. Okay, anything above 50 on these numbers here means industry expansion. And not only is there expansion, but there's more expansion than expected by a significant amount in Great Britain as well. So these numbers are actually very positive. They fit the headlines that were all positive, right? All right, so that's the direction the wind has been blowing today. Now we can go to the charts and start to look at, okay, let's do technical analysis with the understanding that right now some of the fear has disappeared today, and the momentum seems to be up with the equities and down with the US dollar strength. Okay, so let's quickly then go to AvaTrade's website. Why do I want to go here? Because I want to make sure the feature that I mentioned, Ava Protect, which is available on AvaTrade Go, which is our mobile app, our award-winning mobile app, and also available on our web trader. So where would you find our mobile app? You point at trading platforms, you go to AvaTrade Go, and there it is. Download it from your app store. This will take you to your appropriate app store. Click the appropriate one and download the app. All of the features I show you on the web trader are pretty much available on the app as well. Okay, Ava Protect, calculation of exposure to your stop loss, calculation of margin requirements, potential profit. All of this is done in the order window in the AvaTrade Go mobile app, and also in the web trader. So as you're setting up a trade, it's acting as a trade calculator before you buy or sell. And so you see those features here in the mobile app. You see Ava Protect. You see if you put your take profit and stop loss, it'll calculate right next to it your exposure, your potential profit. Everything's done for you in the order window, just like you'll see if you log in here on our main website. You'll be in the web trader platform, which looks like this. And what you'll find is, first of all, the web trader platform is very much more user-friendly than the MT4 and MT5 platforms. I do still like the MT4 and MT5 platforms. There's some charting features I like on there. The programming language is good for auto trading robots and things like that. So it's nice that you have the option for both with AvaTrade. So let me show you a couple features then on the web trader, which are also on the mobile app. If we go, let's say, to gold, and I pull up gold and I want to buy or sell on gold, you see right away it's got Ava Protect. That shield right there, that gold shield, means that it has Ava Protect available. If you want the protection, you check this box, you pick the time frame, and it shows you the cost of the premium for that protection. Now, if we wanted to say, okay, I think maybe, and by the way, let's take a look here. This was a trade we simulated in the last webinar on gold, and look, it's in 277 profit. And if we look at the details, you see the protection only cost $83. So gold could have flew the wrong way if it would have dropped in this case. My maximum loss was $83.01 during the protected time period. I can look now and say, you know what? My protection didn't end yet, but look at the profit I'm in, 276. So let me close my trade. I already paid the 83, so now you're going to see my equity go up by the profit amount, or my balance go up by the profit amount. So here I go. I close my trade, and now I have almost 1900 in my balance. Okay, so for the cost of about $80 or so, I was protected for a couple days, knowing that gold had dropped a couple days ago, and thinking, you know what, with this stimulus talk out of the US, maybe gold rises back up and the USD could weaken. Sure enough, it happened, but you know what? I was protected if it didn't. That protection, I would have only been down 80. You see, my potential profit was much more. I made 200 and something dollars that we just closed. Okay. Now, what we can do then, besides that feature, and let me bring gold back up. I started to show you like if you were setting it up as a new trade. And so if you were buying or selling on gold, I'm not going to tell you which way you should trade, obviously. We'll look at the charts and you can decide once we do the technical analysis. But if you look at this setup, if I thought gold was going to go back down now, let's say, and I said, okay, I'm going to put my stop loss, and maybe I want 10 ounces, and I'm going to put my stop loss. And by the way, you see, it's telling you the margin requirement as you adjust your trade size. Tells you exactly in your account currency how much needs to go to margin. Now, if I wanted to put my stop loss at, let me just make up a number. If it's at 1714, if I'm selling, maybe I think it won't go above 1750. So maybe I say 1752. There's what I'm risking. Shows me right away. Possible loss 383.40 calculated to my account currency. Now, maybe I say, you know what? I don't want to risk that much. I still want my 10 ounces, but I don't want to risk that much. So maybe I think USD will strengthen for whatever reason, pull gold down. And I say, I think it'll happen in a day or two. So I put protection for 1 day, maybe 2 days. I'm only risking 90 now. You see, instead of the 400 or whatever to my stop loss, instead of the stop loss, I can put the protection like I did in the last trade we just closed, right? I'm only risking $90.53 over this time period that it's covered. Once the protection ends, then I'm responsible for managing any further risk. I could just close the trade as the protection ends. But it's an option to manage your risk this way and still go after potential profits that are significant. Maybe I think gold will drop down to 1650 or something, right? Break back sub 1700. My potential profit could be 636, as you see here, and it only costs me 90 to go after it for 2 days full protection against any losses for this time period. Okay, so it's an option with the web trader and AvaTrade Go to use this type of risk management. Dominic, good question. When AvaProtect expires, the trade keeps running, and any negative floating gets added to your account. So if as long as you have enough free margin for it to stay open, the trade would keep running when the protection ends. If the trade gets stopped out during the protection, any negative that you lost on that trade gets added back to your account. If you manually close the trade before the protection is over, any negative floating gets added to your account. Now, you just saw me manually close the trade while it was in profit, and it was still being protected. And that's okay. I was happy with the profit. I closed it. No more protection because the trade is closed. And I made a profit. I paid $80 for the protection. I made a profit of 277 or whatever it was. Okay. And you know, that sort of strategy that you saw the culmination of there when I closed the trade tends to work well when there's a lot of volatility and you expect large movement on something like gold, but you're unsure that maybe it'll be a large movement in the wrong way. So you have a large potential profit and a minimized risk for a specific time period. Okay, good question. And if you have any further questions about AvaProtect, anything else, please pose them. Now, technical analysis, that's the focus of this webinar. So how can the web trader help you with technical analysis? If you click on this tab up here and go to Trading Central, it's a free premium service for all live account holders. You could go to something like Analyst Views and you have free signals. The technical analysis is done for you. So up comes the most recent signals on top first. And so this shows the support levels, the resistance levels, all of the information you need to decide whether you want to trade on a particular signal, on a particular instrument. Let me try and load that again. Murphy's Law, right? As soon as I try and show something, it won't load. There it is. It just took a second try. So here are the signals, time-stamped as they come in, the most recent on top. You see the chart shows the expected breakout move. It tells you at what price levels, entry, exit, support, resistance, everything. Tells you what the indicators tell you, RSI, etc. Okay, it's all here. Signals for free. Usually this type of signal service costs money. We provide it free for all live account holders. Okay, so the technical analysis is here for you. If you want to compare these signals to your own chart analysis, that can help you learn, help you practice. Okay, now let's take a look then at the MT4 platform and take a look at some movements. Now, this was a chart from the last webinar. We talked about crude oil. Crude oil had pulled down, and we drew some lines of support and said maybe we think it'll bounce back up. And in the end, it did. And we could pull up the account history. This is my demo account. And you see here are the trades from the last webinar. So the S&P 500 we thought would bounce back up. We thought the USD would allow that with the talk of more stimulus, and up it went. This one actually hit the take profit and made over 1,000. The first crude oil trade lost. It dipped down. And the second one was in the money. I manually closed it. And why? Because the trade set made a profit. And you see gold, we also thought would bounce up with the talk about stimulus, which creates inflation fears, gold being an inflation safe haven. And the gold ended up working out as well. So over 500. So overall, nice return on just a handful of trades, right? How did we base those trades on gold and oil and the S&P 500? It was primarily based on fundamental analysis, and then we looked at the technical analysis for preferred entry and exit points. And it's the same thing today, except we're going to focus a little more in the technical analysis. We've talked about the fundamental, and we'll focus on the technical analysis now. So let's look at oil. In general, let's take a vote. Do you think oil tends to go up when there's economic optimism, like all those headlines show today, when there's talk about more stimulus, free, easy money for the economy? What does that tend to do for oil? Do you think that type of optimism and easy money drives oil price up or down? Think about energy use. If economies get stimulated with stimulus money and construction and building of roads, what happens to energy usage? It goes up, right? And so what might speculators do with the price of oil? Drive it up, right? Margaret, Dominic, others, I would agree. Probably it's a stimulus to drive oil price up. And what has oil been doing all day today? Let me get rid of the old trade support and resistance levels. Let me delete these, and we'll do right from scratch. I'll show you how easy you could have already profited on oil today, and then you can decide what you do after that currently. So if we look, you know, you easily could have saw oil dip down here and said, okay, it dropped and it was ranging. Okay, so this is this morning, right? It dropped, oil's ranging, and you see all these positive headlines come out. You see volatility's down. You see the US dollar's weakening. What kind of pending order could you have put right above this resistance level? A pending order that if it broke through this resistance would have bought on oil and brought an easy profit. What kind of pending order buys from a higher point? What kind of pending order allows you to wait until a resistance level gets broken, like right here, and then would buy from the higher point? It's a buy stop, correct. Buy stop pending order. So That's already occurred, right? You could have programmed a buy stop pending order to buy from here when you saw the positive momentum in the headlines, and boom, as soon as it broke through that resistance, you'd have been in on a buy and you'd be deciding how much profit to close it with right now. Okay, it's an easy move when you understand the fundamentals. The technical strategy behind it is waiting for a breakthrough of a resistance level. And that is done with a pending buy stop pending order. Okay, the buy stop buys from a higher point. So intuitively, usually you want to let the price drop before you buy, right? Many would say, why would I wait for the price to go up and then buy? And the idea is you're waiting for confirmation of an uptrend, which this resistance level was holding. And once it was confirmed that it broke the resistance, that's the spot where your buy stop pending order could have been programmed to buy when it hit 59.8, and it would have broken through, held, and up it went. Okay, so very simple strategy. Now, you might say, well, hindsight is 2020. That's great that you're showing me that strategy after it happened. What do I do now? What do I do now? Well, we still see that the US dollar is weakening today. It's in the red. The US dollar index, we looked at it. We see that the volatility is way down today. We see the headlines are still positive today. So the question is maybe not, do you want to buy, but when might you want to buy if you want to buy, right? So right now, we're at a resistance point, right? We see it. Resistance down. Resistance, it's hesitating again. So let's go to 30-minute candles. And we say, okay, if it breaks this high point here, isn't it a repeat of what it did here? So we had resistance, 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 breakthrough. If you had a buy stop, you profited. Now we have resistance, resistance. If it breaks through, you could have a buy stop pending order up here and take profit at the next resistance level, which is here. Okay? Another option, if you don't like to buy from the high point, is a pending order in case oil pulls back down, a pending order maybe from this support level here. Okay, we see on the 30-minute candles, the first time it pulled back, it hit this price, held, and bounced. So maybe you wait and hope that it reaches the support level here and buy from that spot. And maybe that makes more sense visually to buy from the lower point. Okay, at some point, this breakthrough of resistance will stop, right? I think it has potential to break this next resistance level and reach this one up here, probably today, right? But if you prefer to buy from the lower point rather than the higher point, in this example, we could say, okay, what kind of pending order buys from a lower point? There are 4 types of pending orders. Well, the buy limit buys from a lower point. So if I want to buy from just above this support level down here, then I would say 60.1 is just above that support level. So what price do I want to buy from? 60.1. Where would my stop loss be? Just below this support level or below the next support level. I tend to like to have 2 support levels need to be broken before I give up on a move. That's just a personal preference. I widen the strike zone on my stop loss. So this is a support level. You could put your stop loss below the first one. You could put your stop loss below the second one. Take a trade size accordingly. The further away you're putting your stop loss, then probably the smaller the trade should be to stick with your exposure comfort. So if I'm putting my stop loss at 59.55, that gets me below 2 support levels. That makes my stop loss pretty safe from any false breakthroughs on the first support level, and it would have to be a real move that breaks 2 support levels before I give up on the movement. Now, where would my take profit be if indeed it comes down and I enter from this level here? My take profit could be at the first resistance or the second. I prefer the second to be more patient. So just before 61, so 60.95. take profit in this example. And then I place the order. There we are. If oil pulls down, there's no guarantee it will. It might just keep on climbing. In which case, you could have a buy stop pending order here as well. You can put both. Buy stop pending order here, buy limit down here. If this pulls down to my support level and triggers my trade, then I'm risking about 50 cents per barrel, even less. I'm getting in at 60.1, little over 50 cents, 55 cents risk per barrel for a potential profit of quite a bit more. I'm going from entry price 60.1, take profit 60.95. That's 85 cents per barrel potential profit. So risking 55 cents per barrel, potential profit 85 cents per barrel. And that might sound like an insignificant number, 85 cents compared to 55 cents, but that's a huge percent difference. The technical analysis here, if it hits your preferred entry point just above the support level, the technical analysis allows you to have a better potential profit compared to what you're risking without having to break through extra resistance levels or something on this buy position to hit your profit. And in fact, being backed up by 2 support levels and only having to break through 1 resistance to get to your larger potential profit compared to potential loss. Okay, so let's see if this drops and hits our price. Great. If not, we don't lose anything. If you're more aggressive and you want to put a buy stop pending order up here as well, in case it just breaks through and you want to get in on the next potential surge, you could put a pending buy stop up here. Type OK if you're with me on this idea. The technicals behind it, the fundamental analysis behind it, and if you have any questions, let me know. Okay, great. Looks like we're all understanding, and we'll move on to another potential instrument. And you see, starting out, it looks like maybe we made a wise decision to be patient, that maybe this is going to drop down to the support level and give a better entry point than trying to buy from the high point. Okay, and certainly don't let that preclude you from trying to sell from the resistance if you believe oil should drop. You certainly can go after some different ideas than what I'm showing. US Tech 100, let's look at that. That's the NASDAQ. We changed names. Used to be NASDAQ or US 100. Now it's called US Tech 100 in terms of the official instrument name. It's the same instrument as the old name. We see the obvious uptrend. This was easy to predict today. Easy move with the headlines that markets would push up. Now what we see is resistance. That's a predictable spot for this to try and drop now too, isn't it? Let me get rid of this line. You see resistance, resistance. It gets near there and it's pushing down. It didn't actually reach this resistance level yet. Okay, so this climbing likely is going to test this resistance eventually here up a little higher. It did not reach the resistance yet. So same as with oil, if the fundamental news says markets should rise, and they did, we see a visual evidence of a rising market. Besides the fact you could have done the breakthrough move earlier today, like we showed with oil, resistance, resistance, a pending buy stop right at this price level here. If you had a buy stop ready to go, as soon as this broke that resistance right here, boom, you're in. Easy profit, right? And it did it a second time here. It broke this resistance, resistance, resistance. So first resistance was here. Breakthrough candle, buy stop would have been a winner. Second resistance, breakthrough candle. You see it's larger than the other candles. Breakthrough candle, another buy stop would be in the money again. The next resistance is up here. If you want to buy on this still, if you think the momentum is going to push up to that next resistance level, you could say, I prefer to buy if this pulls back to the support level here. Okay, this was the old resistance, 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 breakthrough. If this pulls back to this old resistance, which should be support now, maybe that's the spot. Just like with oil, you say I would prefer to buy from a lower point if it's going to pull back to this old resistance level, which should act as support now. So another pending order could pay off. So 13,170 could make sense as an entry. Buy limit, pending order, 13,170. That gets me just above this old resistance level that it had broken through. Stop loss could be limited risk just below that, 13,000, let's say 145. If it breaks that support level, then maybe you say, okay, I'm wrong. It's not going to bounce. I'll take my small loss. And your take profit can be at the all-time high, which is, let's say 13,260 or something like that. Not the all-time high. I mean the nearest resistance, I should say. So now we go to 4-hour candles and we say, okay, here's that red line that we drew, the upper resistance that it didn't reach yet. And so that we put our take profit just before that resistance level, because it's likely to hesitate as it gets near this resistance, as it already did. And so if it drops down, hits our price here on the first support level down, the potential profit is about 3 times what we're risking. 3 times potential profit compared to what we're risking. The only way it hits your stop loss is if it breaks this support level, and it can hit your take profit without having to break any resistance, as we look at the 4-hour candles. Okay, so very nice setup. They have larger potential profit than what you're risking, and it's the technical analysis that's allowing us to set these pending orders with those preferences. We can see on the 15-minute candles, this is the support price here. That's why you might prefer to get in here, because it likely is going to test this support level. Why is this price the support level? Look over here. This was the old resistance. Resistance, resistance. Once it broke through, it became support right here. Old resistance becomes new support. We see it time and time again. So this likely could test this support, and we hope then bounce back up towards the resistance level on the 4-hour candles. So we've got the fundamental news on our side. Fear is down, US dollar is weakening, optimism on the markets about stimulus, and we're waiting for the proper technical entry point to be able to go after a larger profit than what we're risking. Any questions, comments? Yes, of course, you can do, good question. You could follow this same strategy on any instrument that's related to today's fundamental momentum, right? So what about gold? Same thing, right? Why did gold climb over the last 4, 8, 12, 16, 20, 24 hours? Why did gold go up? Why did we anticipate that earlier this week in the webinar? Why did we simulate a trade and make, I don't know, X amount of profit on this bounce back up? First of all, we looked at the technical analysis. So we said, wow, look at this support level. You see here, this was support. Over here, it hit and went up. So we were looking in the webinar, we said, boy, if it hits that price again, it likely could bounce back up. So we put our stop loss below that price, and we went with the fundamental news, combining the technical entry point with the fundamental news of more stimulus coming, maybe inflation fears, and up went gold, right? Went shooting up. So now the question is, well, what do I do now? Because the fundamentals still kind of support gold rising, but it's already at a high point. So then we zoom in from 4-hour candles, let's say 15 minutes. We say, okay, it's still uptrending. It keeps going to higher high points, right? This was resistance here. Resistance, resistance, resistance. 3 times it attempted. 1, 2, 3 times it attempted to break that price, and then boom, it broke through. Then it became support, and now it's testing this price, right? It's testing it. Doesn't know for sure if there's enough momentum to climb still. So The opportunistic spot would be wait for a potential pullback if you're wanting to buy with upward momentum, right? So you might wait and say, this looks like a nice price level. We see it was resistance, and then it became support, 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 and has not been broken since it became support. This price level just got broken today, right? It just broke below this little support level here. The fact that it broke through means it could easily break through again. So the next nice support level is here. So if you think overall gold should rise with inflation fears, with more huge stimulus coming, but you feel that gold might pull back first. So this is the first support level I see on the 15-minute candles that would give you a nice entry to buy from if that's the direction you think gold should go. So again, I'm looking at pending orders here. And by the way, my webinars aren't always pending order based. It just happens that the momentum went up already and ran out, and the momentum's sideways now. The market is consolidating and going sideways. Many times that's where you get a pullback before a continued movement. So right now it looks like a pullback may occur. It was occurring with oil. It was occurring with the S&P 500, the NASDAQ, and it looks like it could occur with gold. Okay, so if it just keeps rising, you didn't lose anything by having a pending order down here to buy. But if it drops before it rises, you potentially could have a really nice payout, a nice entry point with much less risk. So if I'm doing a pending order here, again, this is a buy limit, buying from a lower point. We go across, we say, okay, 1705 is the support, so maybe 1707 or 1706 is where you might prefer to buy. 1706. Okay, stop loss somewhere below that, right? Maybe just below 1700. Let's say 1699. 1699 or 98. Okay, take profit. We'll adjust it when we look at the bigger candles. Let's for now say 1750. Okay, and you place it. Okay, pending orders in. Waiting for a pullback. Stop loss at a very short distance away, just below this. Remember I said I like to have my stop losses below 2 support levels or above 2 resistance levels. So here's one support level. Stop loss is below that. And here's the next one. This was a little bit of a resistance / support, and then it went flying up again. So I might want this just below that level. So now I have 2 support levels that would have to break before I take a loss on this, right? And then the 4-hour candles, I might say, you know what? I want my potential profit at the resistance on the 4-hour candles, which we just nailed. 1750 is this resistance level on the 4-hour candles right here. Was resistance here, resistance here. So if this breaks through and climbs, your potential profit is much, much larger than what you're risking. Risk is from here to here. Potential profit is all the way up here, about 5 times bigger, 4 to 5 times more potential profit than what you're risking. And for that matter, then you could also say, you know what? I'll also take a market move. I'll buy on gold now, put my stop loss on the market move at the same spot as the other one. I'll leave it slightly different so you can see there's 2 of them. Okay, so I'm in on a market move, potential profit up here to the resistance level. Okay, potential profit still larger, about double what I'm risking. And if it drops some and hits my pending order, then I have even more in that direction with an even better entry price with the stop loss at the same spot on both. Okay, that's a 1-2 type of move, so that if the market just keeps climbing, you're at least in on something. If it pulls back, then you got your preferred entry points on 3 more instruments in this type of setup. Okay, all of these are strategically placed with entry points, exit points, pending orders based on the technical analysis with support and resistance levels. and then backed up in the direction of the fundamental news as we know it, which obviously could change. That's why you have your stop losses and manage your risk in a way that makes sense, because again, none of them are guaranteed to profit. But in the end, if we get results like we saw here, right? If we get results like we saw here, I could lose all of these trades right now, and I'm still an overall profit, because even a 50% success rate, you see the payouts are bigger than the risk when you set up with technical analysis like we're doing here. And honestly, you should win more than 50% of the time anyways, if the fundamental news is on your side. If you've properly read the fundamental news situation and then use the technical analysis for your preferred entry points and exit points. I think we've covered enough, a variety of instruments here. Any questions, comments before we end things today? All right, everybody, thank you for joining. We'll have another session next Tuesday at 6 p.m. UK time. All right, everybody, bye for now. Good luck with your trading. And until next time, I hope you make lots of profits. All right, bye for now.